So in this video, we're going to talk about Exxon. They reported their earnings on Friday, and the earnings beat estimates, but revenue fell short of Wall Street estimates. And on the news, you had initially a gap higher, only to end the day lower, roughly 2.5% or $2.74. So the question is, where's price going next? Well, to get some clues, we need to go up to the higher time frame. This is the monthly chart, and as you can see, you have these wicks. We'll call them rejection wicks. And to the left of this extended range green candle, you have these wicks on the bottom of the bodies representing buying pressure. So what you can say is that you do have a major support resistance band at that $96 level. Now before we scroll down, this is called multi-time frame analysis. Before we go down to the weekly, the daily, and maybe the 4-hour chart, let's actually get into the results. So Exxon Mobil Corporation reported fourth quarter earnings that exceeded analyst estimates while revenue fell short of expectations. The oil and gas giant stock edged up following the release. Again, went up as we saw it only go down for the day. The company reported earnings of $7.6 billion or $1.72 per share for the fourth quarter of 2024. Excluding items, earnings were $1.67 per share, surpassing analyst consensus of $1.55 per share. However, again, revenue came in at $83.43 billion, which was below the estimates of $85.35 billion. Now, here's what the CEO had to say. His name is Darren Woods. He says, "Our transformed company delivered unmatched value in 2024. Operationally, we delivered strong results on safety, reliability, and emissions. Financially, we delivered some of the highest earnings and operating cash flow in a decade. The oil major distributed $36 billion to shareholders in 2024 through dividends and share repurchases. Exxon Mobil plans to extend its $20 billion annual share repurchase program through 2026. Looking ahead, Woods expressed confidence in the company's ability to deliver on plans to generate significantly more earnings and cash through 2030 and beyond, citing a unique runway of value creation." All right, going back to the charts, we're now going to drill down to the weekly chart. But before we do that, you do have some divergence, right? As price was making higher highs, the RSI was suggesting that the upside momentum was waning as it was making lower highs. All right, going down to the weekly chart. Just looking at the peaks, and besides the rejection wicks, there's really no ideal rally base drop formations. You can see your moving averages on the weekly chart now starting to turn over. You have this bearish crossover between the 13 and the 26 simple weekly moving average. Again, how far can price go down? Well, you could say that price is in a range right now, but the origin of the strong move higher, which took prices to about 125-ish, has its basis and origins from this leg higher at that $98 level back in January of 2024. Now you do have this rally, one basic candle rally out. Now that level is pretty much used up. It's no longer fresh. Can it hold again? Definitely. But this was a weekly buy level, which held not once, not twice, not a third time, but a fourth time. You do have another level here. You got a drop in price, one basic candle to rally out. So that will be your next weekly buy level, but that's going to be at $86, and that's going to be quite a ways from current price at $106. Let's take it down to the daily chart. Now again, within this range, if you're trying to place trades, it's very tricky. Right? You got a lot of choppiness. But if you go with the momentum, you could get long. This is a level. That's a daily sell level, right? Drop, base candles drop. You have another one. Drop, base, drop. You have another one. Now this is a level on level. You got that one, and you got the one just below. As price is going lower, it's making sell levels, which tells you that the sellers are in control. Yes, you are getting this reversal, but it could be the pullback before the next impulse move down. All right, you have this drop, base, and then a rally. At the bottom of that zone, that would be a daily buy level. So Exxon is going to have and be heavily correlated to the price of oil. You want to look for clues on where Exxon is heading. Just look at the oil prices. Just scrolling back out to the weekly chart. Again, if I was a betting man, I would think that price is going to go lower. Your liquidity is going to be below this $100 level. Thanks for watching. Subscribe. Please like the video.